Greetings, everyone. This is Dr. Crystal Richardson, and we are here with Congress for Global Communication, Sustainable Goal number 10. And our leader for today is Dr. Maritoni. How are you doing?
I'm doing great. I'm so happy to be here tonight or today, wherever you're coming from or listening.
Exactly. Thank you. And so we do have some others that will be joining us, and we'll be going over the vision and the mission. And so I'll bring some of the other guests on the screen that we have today.
Hi, just wanted to introduce everyone. This is Kevin Wilson from
Hello.
Kansas, and we have Ramat Waja from Tema, Ghana, Africa, and also my dear friend, uh, Leonora. I think is she coming in.
Yes, we're waiting for her to come on screen, and then we can have her introduced, as well as Kadari.
Perfect.
And here they come.
And I would like to introduce to everyone my dear friend and colleague Kadiri Adaba, all the way from Chicago and also originally from Nigeria as well. And then I have my dear friend Leonora Castillo, currently in Texas, but she's originally from Silicon Valley here in California.
Thank you for those introductions. So we will go ahead and go over the vision and mission. And do you have that, Dr. Maritoni?
Yes, I do.
Excellent.
So, our finance and wealth equity team, our mission is to empower communities and nations worldwide through the promotion of financial and wealth equity. And also, we are committed to facilitating sustainable wealth generation and also responsible wealth transfer, aligning our effort with United Nations Sustainable Development Goal number 10. Imagine a world where financial and wealth equity is accessible to all, regardless of their background. Our vision is to create a future where wealth is generated, responsibility distributed, equitable, and also transferred to our future generation. So that's our vision and our mission for our finance and wealth equity team for CGC. And I would like to have each one of my speaker to introduce themselves. So I'll start with Kevin. Go ahead and Kevin, introduce yourself.
Yeah, sure. My name's Kevin Wilson. I'm honored to be here. Thank you. I'm from Topeka, Kansas. If you've never been, it's where everything's happened. No, I don't get that line. Most people don't even know where Topeka is. It's the capital of Kansas. I own a small martial arts school here in town. I've been teaching for 27 years now. Um, have done some different business ventures. I've got a degree in business and really stepped up my personal finance situation through my business experiences and decided to make some changes because I realized that I wasn't taught finance at school and I didn't really know how to manage myself. And I took myself from a negative net worth to being a millionaire over a 10-year period and has increased that. I just turned 50 this year and checked and I've hit that multi-millionaire status in the next 10-year period. And I've written a few books about it, some other things, and I'm very passionate about educating on personal finance. So that's the elevator speech on myself.
Thank you so much, Kevin. And I
Thank
would
you.
like to introduce my dear friend Ramat.
All right. Thank you very much, Doc. So my name is Ramate Belawaja. I'm a banking executive from Ghana. I'm a humanitarian and a strong advocate for youth enterprises in Africa. Thank you.
Thank you so much, Ramat. And again, we appreciate your time today.
Sure.
And
Thank you.
now I'd like to introduce you, Leonora.
It seems like, can you hear me? Because
Yes,
it
I hear
seems
you really clearly. It's
my
really
screen is frozen or something. Anyway, my name's Leonora. Originally from the Philippines, we moved to Sunnyvale, California in '73. I've been in, I've been a high tech computer designer. The last job was at Intel, but I'm also been an entrepreneur for all these years. Currently living in Texas, have our own business dealing with real estate, buyer, seller, and mostly investors that we represent. And I've been a youth leader for a long time, like almost 20 years.
That's amazing, Leonora. And thank you again for joining us today, all the way from Texas. And then the last but not least, I would like to introduce my dear friend Kadiri. Go ahead, Kadiri.
Hi everyone. Hi, my name is Dr. Kadiri Adava. My background is in healthcare. I focus on health disparity, related to financial literacy and financial inclusion. And basically, I'm in Chicago. I'm based in Chicago. I am very big in health equities, focus on health disparity, and this is what this SDG number 10, really focus on equality and disparity. So thank you.
Well, I would like to introduce myself for those that don't know who I am. My name is Dr. Mary Tony Jones. I'm the team leader for CGC team called Financial and Wealth Equity. And I'm all the way from California. I'm born and raised in the Philippines. I moved to Oakland, California, and now traveling around the globe, just doing my humanitarian effort and advocacy for humanity and also equality. And also, I'm a dynamic, you can say, person that deals with a lot of people in terms of building their company, the structure, the organization, or just navigating to financial frontiers that are, you could say, from Silicon Valley, or keeping the traditional investment, and also dealing with different kind of things that really create an impact and carrying on legacy of many profound people, just like all the guest speaker today. So thank you again for everyone for being here today, and we can go ahead and get started. The first question that we have today is, I would like to ask our team to, based on the economic resilience and diversification, given the global economic slowdown and regional disparity, how can a financial institution, particularly in banking and insurance, strategically diversify their portfolio to navigate economic uncertainties effectively? And I'll have these two questions to start with Kevin and Ramat.
Okay.
In that order, would you like me to go first?
Yes, go ahead, Kevin.
I think it's a great question. I think it's one of those ones. What makes it a great question is I don't think there's really a right answer to it. You mentioned a global economy. We're becoming more and more a global economy. We have over several years. The world continues to get smaller. That's both a good thing and sometimes a challenging thing. We got to address different economies. Economies have different priorities. I think that as we continue to be a more global economy, our challenge is going to be to look at some of these technological advances that continue to make the world smaller. AI is becoming a big thing. There's the things that will help out with a lot of efficiencies that will allow us to do more things. But I think the real challenge, I'd like to say that, in a perfect world, as we go towards a more global economy, this is going to sound strange, but I think if we, this won't happen, but in a perfect world, if we could shift not necessarily to letting profit be the metric of our successes in a global market, and maybe look at some other metrics that really help bring a stronger altruistic aspect to our global economy, that would be perfect. It won't be. Profit tends to be still a major motivator. But I think looking at the technologies and how that affects the world overall, I think that'll be a big part of bringing that in.
That's excellent. Well, how about you, Kramat?
I'm fine, thank you. Yeah, Doc. All right. Doc, so it's also a very relevant question for me. So I would like to say that the economic resilience and diversification are important strategies for financial institutions to cope with the challenges and uncertainties posed by the global economic slowdown and regional disparities. Okay. So I want to take typically the African market. I think that if the bank extends or expand their lending activities to different sectors, that will be helpful. So with the whole global showdown, we realize that it affected the global supply chain, meaning it's relevant for most countries to increase productions, internal productions, to reduce further costs in importations. Therefore, the banks can leverage or expand borrowing to, let's say, the manufacturing sectors, because obviously we are expecting internal manufacturing to increase. I also think that the bank should focus on structured finance. So if what we were doing 2 years ago, I'm not sure it will be too applicable now, looking at the whole global showdown. So finance should be more structured, especially in terms of payment. So if somebody wants to borrow 5,000, 2 years ago, it could buy items probably worth about 1,000 quantities. But obviously, taking the same $5,000 to make that same purchases, quantities are going to reduce because obviously they are increasing prices. So I think that if we focus on expanding lending, if we focus more on structured finances, it will help. I just would like to put this across, especially in the typical African market. I think that banks should be on standby for moratorium, because when businesses take facilities to expand their business and we are immediately expecting them to pay back in 1 month, I mean, we should factor in unforeseen circumstances that might happen. So appropriately, if there is a 1 month moratorium, I think that comfortably business can start paying in, let's say, 2 months. So banks are to expand our lending. We have to look at structured finance, and I think that we have to give grace period when needed in advancing such support to businesses. Thank you.
Thank you, Ramat. And Leonora and Kadir, do you want to add anything?
Just that the banks, I'm sure they're hedging their risk using derivatives like futures and options and swaps. I don't know about insurance companies, but banks, I know they do that one to protect their assets from losses and market downturns. Also, I'm sure the banks also invest in different sectors of economy to just reduce risk for certain sectors, especially when there's when things happen during the .com times and everything just went down. If the banks don't expose themselves to just or limit themselves to just certain sectors and be more diversified, it's even better. And then just hedging their risk. There's a lot of mix for US and European stocks, and also bonds and real estate, and some mix of healthcare stocks and tech stocks. And then also just a bank could hedge their risk exposure to, right now there's rising interest rates. They could just do some interest swaps with other banks for honest loans and figure out and not be exposed to just all mortgages, all banks, and things like that.
Thank you, Leonora. And overall, from my end, I just wanted to let the audience know, whether you're in the United States, UK, Africa, Asia, wherever part of the globe, definitely think about diversifying strategically across sectors and regions to mitigate risk, and consider alternative investments. Monitor market trends and stay agile in adjusting portfolios to navigate economic uncertainties effectively. So constantly double checking what you have and then really diversifying. So I'm going to the next question. Question number 2 for our panel discussion: navigating regulatory complexity. With an increasing regulatory landscape encompassing areas like crypto assets, ESG, and data privacy, what are the practices the financial institution in capital markets and private equity to stay compliant while capitalizing on emerging opportunities? And anyone can just hop on it.
Yeah, that's another great question. I'll start with that. It's interesting because regulation, in my opinion, is a very funny thing. It can be kind of controlling at times, but then obviously very necessary at times as well. And I think some things that I've read and some interviews I've watched, I think regulation, as we're moving into this market that you're talking about, I think it's going to be pretty important. We've got a lot of new things coming to market. We used to have, in the American way, we used to have our dollar backed on the gold standard that disappeared in the 70s. And then now, I mean, really, we have our dollar backed on the trust standard. That's really what our paper money is. So far, it has seemed to work. As we go into regulation of different types of currency, we've got the cryptocurrency stuff. Regulation is going to be important because, like it or not, we just have predatory lenders and things like that out there. We saw what happened in 2008 with the housing market. We just need some regulation to navigate these uncharted waters because we don't know what it's going to look like. We will learn more as we continue to go, but we need to have some standard. And I think we've been focusing on that, at least in the U.S., as far as having some regulation on that. But I think it's going to continue to be even more and more critical. Now, what that navigation looks like as far as across industries, that's something we'll continue to figure out. But I think we're trending in the right direction, and I think it's a good direction. Me personally, that's what I believe.
Thank you, Kevin. How about you, Ramat and Leonora?
Okay, Doc, thanks. So as Kevin mentioned, the regulation is important. So the whole regulatory landscape, I think, is becoming more complex in these areas you mentioned, like the crypto assets, the ESG. Okay, so these regulations is aimed to address the market risks and opportunities associated with these areas, such as financial stability, sustainability, consumer protection, which is important because, I mean, there should be regulations so that the consumer is, the consumer is safe. Whoever it's getting involved with this type of investments, the interest is protected. So it is very relevant. I just think that the banks or the financial markets will have to find ways and means to align with these regulations as well as increase their risks as well. So typically in Africa, I'm always speaking in terms of Africa because I'm in Africa, there's this whole perception about crypto because we are made to know that the traditional banks are a walk to and they have a regulator that is a central bank. So when you pick Ghana, we have Bank of Ghana. So in case you have a business with a bank, an investment firm, and there is something you are not too clear and they are not willing to explain to you, you can walk to the central bank. But we are made to know that we don't actually know who owns crypto. So if you don't know the regulator and the owner, how do you make an investment in such areas? So I think that these are some of the factors. However, I mean, crypto coming into the system, obviously is taking a part of the bank's deposit. So if the bank has interest in increasing its businesses, activities, some products and services, we need to find ways to align with these regulations to make sure that everything is okay. Thank you.
Thank you, Ramat. And I'm so happy Kadiri is back. Kadiri, the question number 2 has something to do with navigating regulatory complexity. And you mentioned data privacy. And I know you're one of the experts in terms of this topic. Can you go ahead and let us know the importance of that?
Thank you, Lenora. I don't think there's an expert in crypto, right? Like, I think everybody claims they're expert. The reality of things is it depends on how you're speaking about it, right? One, I think that, I agree with you. I hear your question. So let's start from the fact that crypto, it's not really blockchain, right? Like the language, right? Like we're talking about the blockchain technology. I like to talk about blockchain technology rather than the cryptocurrency as a special, financial game that everybody is playing. But we're not in that. Let's talk about the technology behind what we're really saying. So the problem is, I think, when you look at the structure, the regulatory platforms are built on legacy system, old technology. And now we have a new technology that they don't understand, which is the blockchain technology. Is the understanding of that technology, that's where problem is. So how are you going to be regulating a system that you don't understand? So that is just the fundamental problem that we understand, that I in this space, or most people in this space, she's trying to figure it out. Like, okay, you have different platform, Bitcoin, Ethereum. You have all those technology. You have Polkadot, right? And all those are all fundamental technology that runs these crypto platforms. But when you're asking a regulator about crypto and they don't understand the technology behind it, it's very, very confusing to make the law. So that's what was going on in America. And the thing is, if you have a lot of technology space and there are other emerging market who are just don't have those old technology, like Africa, for example, we didn't have the .com era. Like we didn't have the .com era, like the .com bubble that makes America rich. We didn't have that. We skip all of that and moving into this new technology, which is blockchain technology that is willing to give everybody, the opportunity to start from somewhere. So the countries like America, all those other countries that have the old technology, I think you find it difficult for so much money that have been invested in the old technology. You cannot tell me to just change my old technology that I've invested so much money in. And that is where I see the regulatory baffle and the regulatory problem is people who have, and then let's put it another way, we're talking about digital asset now, right? Like this is new asset class that nobody normally talk about. Like your data is an asset, like your house is an asset, your deed is an asset. So we are creating this whole new economy that the old infrastructure companies didn't feel it would happen. So I think that's where we are right now at this stage. And I think that looking at countries that really take their time to start building this technology and forget the old infrastructure from an investment perspective, look at if you are doing emerging technology, trying to support diversity, from the first question that Dr. Martinez was asking, diversification of your assets come with this space. So that is what I can say right now. I hope that all the regulatory teams can focus on it and learn about the technology before they can jump into making decisions. It's like me, a doctor that didn't practice. Let's assume if you are a doctor, you have to be trained in order to make medical policy. If you've never do any kind of procedure and then they are putting you there to make policy for this procedure, the system will not sustain. So that is the surgical way of thinking about these situations. And I hope that Africa wake up and be, really focused on learning it than just jumping into the bandwagon, and then learn it and be able to regulate it. Thank you.
Thank you.
That is all.
That's awesome. And I love that. And that's so true what you're saying. What about you, Leonora?
Well, I'm going to go on the compliance issue. I think the financial institutions should start with a clear and concise compliance policy that's always communicated to all the employees and should be regularly reviewed to reflect changes in the regulatory landscape. There's also it's also a good idea to invest in compliance training for all the employees. When I was in high tech, there's always trainings. There's trainings after trainings, and you can't go. There's always a reminder saying you got to go check this out. You have to pass this, or you have to do certain things to continue with your next work, because the high tech is always there's always IPs, right? You can't talk to anybody, even your next door neighbor in the office, if you're not working in the same project. So there's that. And then there's also technology now to automate all your compliance tasks, like software solutions for your KYC, your AML, and trade surveillance. So focus like the employees can focus on more complex compliance issues like anti-money laundering, and use AI to automate the rest of the compliance tasks.
I'm not sure if you can hear me, Leonora. You just froze.
I can hear you.
Okay, perfect. Go ahead and repeat that last part you said about compliant.
Oh, which part of that?
Just the last second is just the compliance part that you
Oh,
want.
just using the technology to automate your compliance task, and so it frees up your employees to focus on more compliance issues. That's all.
Thank you, Leonore. That's really, really great. And I agree with the whole panel that we must stay informed on evolving regulations because there's so many thing changes from before pandemic and after pandemic. And with all of the changes that is happening worldwide, there's still a lot of changes, regardless what country, what organization you're at. Like what Kadiri said, not only for the customer, but the employee, plus also the people that produce this compliances, so everything else, everyone really kind of get back on really auditing themselves, assessing things. Even if you've been within the company for over decades, double check the compliance, things has changed, so that then you can converse with your client and also make it easier for you, because I know companies constantly improving and changing, but only the new hire is up to date, and then there's other employees that gets left behind. Because I remember back in the days, they're so focused on training, they're so focused on really giving their heart and soul to the employee so that they can carry the legacy to be the, you could say, the homeowner, the business owner, the next CEO. Now it's just like we are really lacking on that training and compliance, let alone the changes and the technologies that is adding to the. So I agree with Leonora. Invest in compliance technology, conduct regular audits, and foster a culture of regulatory awareness. Keep yourself aware. And then capitalize on emerging opportunities by adapting quickly and leveraging technology to navigate the complexity of crypto assets, ESG, and data privacy regulation. Constantly sharpen yourself anything that got to do with data, because there's so much regulation is happening. Even for your own settings, make sure your settings in your home, in your own personal computer, in your office, in your work, are all in alignment on what you're allowing. Data, you can say, privacy is actually, because sometimes you might think that you are being protected, but if you don't audit your own settings, and it's on you, you just clicked on that one and gave all your information away. So we really need to be extra careful in what's happening and the changes of growing. um, so now the next question is going to be number 3. The digital customer experience is going to be the main topic. And the question is that in the face of evolving customer expectation and competition from fintech and digital platforms, how can traditional financial institution adapt and deliver hyper personalized digital services to retain and attract customer? And I can start with Kadiri, then Kevin, and then let the ladies flow right after that. Go ahead, Kadir.
Thank you. I'm not in banking, right? But I'm gonna do my own from a user journey, right? Like I'm a user of bank, and from a user perspective, I know that most banks are not adapted enough to what there's no communication between the banking services, the old legacy platform, which is the banking, the way they've been thinking, and then the new form of technology that is coming in. For example, today you can easily do a KYC on your phone, right, within 8 minutes, and you're in compliance. But most banking people who are in front of on the bank, they're not technology savvy, right? And then you bring somebody who is technology savvy, then they can communicate. So without that communication, then when you see them presenting patient journey, everybody is speaking different language. So that's my user journey experience. It's like when you call for customer services and then they transfer you to multiple different people because all of the bank are not aligned. Either on the back end, they're not onboarding process is not shared between the team properly, or there's a different set of team that have different material on how to properly onboard new customers. So I see that a lot from the back end, right? Building out customer users, trying to use, patient journey as a customer, I use it patient, but because I'm a physician posted it. So as a user, I want to be able to have a seamless, services through the bank. But it's so complex because there is a difference in communication on how the onboarding process is actually, display in the system. But entirely, I still think that there is a need for a concrete, one. I think a good example of that would be M-Pesa, right? Like all in one place where a bank can easily transact. And then that all in one place should be interoperability. So which means that if I go to Ramat Bank, and then I shouldn't have to go to another bank, and then they'd be asking me the same question that is already in a system, all because of validating who I am, right? But at the same time, they all use legacy system. When they close my bank from Bank of America, automatically they're closing your bank in Wells Fargo because they use the Chase system at the bank. But when you want to open a bank, it doesn't go similarly. It's like, okay, why don't you just use my information from Bank of America because I have a Bank of America because we have the Chase system. So because of data hogging and data ownership process, so that interoperability is not there. In what we are doing is to have that. That's what Fresh Credit is doing, is to have that in data interoperability. It doesn't matter where you are located. If you are Kadiri Adaba, you use Bank of America, and tomorrow your Bank of America agree that you're a good candidate of open a checking account. Therefore, if I go to another bank, that system is there, just like have your social security number, pull up that same information and say, he's a good candidate. And then that will help in expanding bank account, help easy access to bank account, help on bank people to immediately be banked, right? Without that serious conflict or serious delay in opening bank. And that would help very well for my side on how I'm thinking about it. Thank you.
Thank you so much, Kadiri.
Well, and I'll piggyback on that. It's interesting that Kadiri says that, especially as a physician, because I know from my perspective, I've noticed lots of healthcare industries try to make that more conducive as a patient. Your information's can be accessed from different people, different physicians. If you got certain allergies, whatever it is, everybody knows. The problem with it from my perspective, and understand that this is not the best question for me because I'm a dinosaur. I don't even have a Zelle. Like everybody's always ahead of me. I'm very simple. But a lot of that is primarily for the reason I'm going to address. And that is sometimes when we look at balancing that convenience, we also have to look at the other side of that coin, which is security. And I think that's probably going to be the most relevant thing that we have to look at when looking at. Yes, we want to appeal to these, and let's face it, Kadir's right. End users are going to be oftentimes much more technologically advanced in banking institutions. The banks will have to catch up to that, and maybe they never will. But the reality is, I want to know that my information is secure, and I think that will continue to be the challenge when we navigate those waters of convenience. Is we got to address the security as well. And again, like many things, I don't know if there's necessarily a right answer for that, but in my opinion, that's where we keep our eye on the ball as far as keeping information secure. So that's my 2 cents worth on that one.
How about you, Leonora and Ramat? Do you want anything to add on?
Sure.
I think do you have something to add? I think you're.
Yes.
Yes.
Let me just go ahead
hold on now.
Leonora. Go ahead, Kadiri.
Okay, so I was going to kind of get to, that's what I'm saying, Calvin, right? We are living in a system. We have the technology for interoperability. You are correctly right. I don't need to know your address, right? When you go to the bar and show your ID, they just want to know how old you are. Right, like that's what they know. I don't need to know your house address, your name. Well, we could say your name, but just the date of birth. That's what I need to know. So, but now when you go to the bar, you just show your everything. They know your address, person take a picture, all of that information. But with the new technology that we have today, you can de-identify all this information and then only present the information that person needs. So for a good example is this person worthy of opening an account with Wells Fargo, right? After Wells Fargo have done the KYC, done all of those information that you needed to do to make sure that Kadiri Adaba is worthy of opening an account with Wells Fargo. Then now, if I go to Bank of America, I don't need to go through those processes. So the problem is that the people who are doing the KYC are making money, right? They want to continue to do the services from other people. So that is why we are not able to solve that problem. But with me, I believe that the problem should be solved and make more people focus on the bank. If I'm going to bring the bank to banking, because there's a million of people who are all bank, that is the best way to immediately translate them to banking without complex situations and argument, or just that is how I think about it with the technology. Thank you.
All right, Doc.
Leonora,
Okay. All right, Doc. Thanks very much. I think that being in the system, I can understand what you are bringing on board in terms of a user. I think you mentioned it. So I think that you are talking about the whole, let's say, for instance, the whole onboarding process for, let's say, account opening. And I'm happy that there is, you have a platform and a technology that can do that. In your part of the world, it's even a bit okay. But in our part where we are, there is a lot of questions and all that we need to answer. I think the technology should be able to have individual informations to a certain point. But however, we should remember the risk factor. So whatever data, whatever platform the data can be put across, there should be some kind of authentication. So we know that really it is this identity we are dealing with. So nobody comes with somebody's identity per, card numbers and all. So I think that it is an encouraging platform, because the whole digital customer experience bit, you've made me realize that, it's a bit lacking and there is a gap in terms of onboarding process, especially looking at account opening. But I think that if there are third parties offering this kind of, technological support, it will be better. Between us banks, we are competitors. So everybody would like to keep the customer and maintain the customer. But aside that, the physical traditional forms we have for onboarding people, there are questions like, are you with other banks? So we sometimes even write to them from introductory, but we can get that. But banks giving more details, I know that will be a bit skeptical, because nobody wants the customer to leave him or her to, another bank. But technologies to enhance information so that the whole process, digital onboarding process, is easy, is very important. I realize also that this is an important topic. So when Doc sent it, I said, oh, when I have time, I'll also rally education around it in Ghana, or let's say in Africa, because we realize that people are too glued and familiar to the one-on-one physical interaction. So most of the time we forget the digital aspect, or where the platform where interactions by customers are done through our digital channels. Most of the time we are focusing customer satisfaction, good customer experience on physical interactions. So I think that banks will have to work on a more enhanced digital and friendly technological platforms, right? I'm just giving a little example. Now, we should even be able to look at digital offerings like, lending, digital payments, insurance, investments. That could be done on digital platforms. So when you look at the crypto product, for instance, I think that along the line, when people get on board, you are privy to what interest you are getting. And I mean, on daily basis or monthly basis, you can track. But with the normal traditional bank, so you go in, purchase your investment, and you hear from the bank upon maturity. So if it is 1 month, so I think that if we have these digital offerings, that makes it easy for us to do investment, and it's friendly and gives certain little feedbacks, it will be helpful. Partnering with certain fintechs and digital platforms are key, because we have certain fintechs that are also offering, indirect kind of investment and, lending. So typically in Ghana, we have the mobile money lending. So if somebody thinks that, how much does it cost me to get a mobile chip? and a lot of data is not taken. It's just through my ID card. But if I have to go to the traditional banks and I'm asked like dozens of questions, and I can just request for support from this mobile network. So why don't I roll there? So I think that it thinks about partnering these kind of fintechs, or this kind of fintechs will also help, so that at least if people cannot walk to us to make transactions, and let's say for instance in deposit, and I have the money and I can put on a mobile wallet and can easily transfer onto my platform, why not? Feedbacks are also key, and I think that most of the times we forget feedbacks on digital platforms as others have. um the last time when I was in US, I did a transaction at Best Buy, and I was very happy because, for us here, most of the time when we do interactions with people, we forget to take feedbacks, But I realized that every transaction or purchase you make, the salesperson wants to offer you a sheet so that you put in something on it. So feedback through digital platforms are also important. At least after every transaction, we should be able to put something friendly that asks, "Are you okay? Is there any other thing?" Then it takes up from there, because in at the part of Africa, where we are, everybody wants the one-on-one kind of transactions, because the digital channels don't have that kind of friendly relationship. So I'm moving money, I'm done, and I'm gone. Nothing else, happens. Whether it was successful or not, sometimes it's hard to get feedback. So I think there's my little contribution to the digital experience, customer experience.
Thank you so much. What about you, Leonora?
So yeah, like harnessing says, how can capital market firms and insurers harness emerging technologies, right? So I think most banks and financial institutions are mostly product centric. So if they adopt a customer centric approach, then they could deliver more personalized digital services. If they use AI and machine learning, they can analyze customer data to identify patterns and trends. They can develop predictive models to forecast customer behaviors, generate personalized recommendations for products and services. And they can also see who's gonna need a mortgage loan in the next 6 months, in the next 3 months, things like that. And there's um there's there's companies that already invest in data, right? These are big data. So companies already invest in this type of analytics. These are predictive analytics that forecast customer behaviors and help them identify who would need their services and which services they would need, right?
Mhm.
Yeah.
Thank you so much for Leonora for adding that, because we really do need to embrace the user-friendly interfaces, leveraging the data analytics, and also if you notice, I'm not for the audience. We want to really provide information that are really evolving and changing, because we're so custom and traditional, and then like Ramat and Kadiri have experienced in Africa, they're still behind. So we have like M-Pesa, like Kadiri was mentioned, that is really in need in Caribbean islands, in other part of the third world country, in Africa, to really catch up with the advancement of this digital customer service experience that a lot of other banking institution and other company that is already like full blown going on in United States and UK. Actually, when you step into majority of the banks now, they're just like less customer service, very few people, they want to use everything technology. And when you go to UK, completely, almost I think 90% of banks, when you step in, you have to go into those ATM inside and just really go through the digital experience on your own. And there will be like a host that will greet you, but to just navigate to let you know they can't assist you on a one-on-one. This is why we're having this discussion, because it's literally moving so fast, but also we want to let the corporation and the banking and the other financial institutions to understand that the traditional one-on-one customer service is still important, like Kevin said. How are you going to be able to sustain your company if you don't really get the feedback of your customer, or using the right expert that does your data analysis and your compliance, to making sure to really understand the customer experience? Yes, can be digital, but can also make sure to actually there's an option to really cater and prioritize what the need of the customer, because sometimes they might not need all of it, or they might need some of the products that are actually that you could say available, but it's not being offered because lack of training or lack of interaction. So it is it is important for us to really stay attuned to evolving customer expectation, invest in innovative technologies again, and also prioritize a seamless and hyper personalized digital customer experience to keep it simple. And also be careful on when you're like, again, they always want to ask all this basic information for the customer. Make sure to have that screenshot in your phone and then said, here, I don't have to say it. Can you just, this is my information, I'm right here, here's my ID. Limit yourself from speaking out, because things are being recorded so much that we're constantly being, yeah, it I know that they're protecting us, but we also have to start thinking about who's listening, what device are listening, how many times do we have to mention certain things. So I always tell a lot of people, when you're doing business or you're talking to your family, get all your gadgets and put it on another room, you know because it's just the privacy itself. Sometimes you never know which one it's, whether that earphone or that actual phone, that whether it's off, still recording. So so they're always still taking whatever it is that they need, but at the end of the day, we have to understand to stand on what we want and also protect ourselves. And the digital customer experience is coming strong in UK, US, and some other part of the country, but also it's being brought to Africa without even having to train and to understand really, do they need that. So then M-Pesa will be the great choices for those small islands like Caribbean, St. Martin, Philippines, and other places like that. So so I really love that we're having so many different discussion and different people from different background, because the audience in Facebook right now, I want you to, if you don't understand what we're saying, but to just to re-listen to the video again and to understand everything that we're giving to you is to let you know what's already existing and what's about to change and what's coming. And you don't want to be shocked when things just change. And I know I have a lot of clients that are elderly or even young people that is not into technology, like Kevin was saying, like the Zelle. Yeah, it's actually, it's easy to do it here, but there's now, it's like, it's so many things to know and so many options in United States and UK and other places. So you want to, before you start learning, just start within your own network and your own family. What are you using? Oh, Venmo, Cash App, or Zelle? And stick with one and try to learn with one. It will help your, you could say, your mental health, and also you to for your own mindset also to learn something new. And but just practice make you perfect. And everything that is new, our mind is going to reject it. And so don't be hard on yourself, because I'm, submerged into Silicon Valley, but I love being in Africa because I'm like, I can be away from all of these things. Then I'm in UK, in London. I just got back. I'm like, are you serious? I can't talk to anybody. Like, I just have to, because I do love that customer experience, the one-on-one that Kevin was talking about. And then going back, I was like, man, we don't want to forget the great foundation on why certain company and banks lasted this long. you know there's still that traditional wisdom that the previous great, you could say, inventors and bankers and other things that had created certain things that was now being removed because we're so accustomed to just fill in the blank, forget about the training. And then there's constantly compliance changes, and everybody gets shocked, and everybody's going through a lot of things, with all the things that is skyrocketing. I mean, there's always crisis upon crisis and other dilemma that other people, everyone goes through a lot of things. It's just in different facet. And like what Kadiri said, Africa's a miss.com period. And having to reintroduce this is actually is good, because then they get to learn from the mistakes of what we have. accomplish. And then for us in UK, slow it down a little bit and not to forget what the great foundation that needs to be there is the people you're serving, customer, before you start thinking about the digital. And then do you have a special services like what Ramat said that will show you or train or have video to really or a customer or 800 number that they can call to navigate those tech support? Even the tech industry used to have tech support services. Now is either you email me or you chat me, and some people don't have the device or don't even know where to go. Doesn't mean they don't know it, they just don't have the exact link to even get to that process, because now there's so many options and other things kind of sandwich into each other. So we do really need to be aware on what's going on around us. And the next question is our last question is question number 4. For the technological transformation, this is a really big topic across the world right now. As technology continues to reshape the financial industry, how can capital market firms and insurance or even any kind of business, doesn't have to be in business, it could be anything that you think that the emerging technologies like AI and the cloud computing to gain competitive edge. What do you think about this AI and also how do we manage the cyber threat? And I will again start it with Kevin, then Kadiri, Leonora, and Ramat, then myself for our last 7 minutes. Go ahead.
It's a great question. It reminds me there was a book I read called Abundance that talked about the technologies of tomorrow. And at the time I read it, it talked about self-driving cars when they weren't even thought of. And they said it'd be on the road by 2020. And it seemed crazy, but then we were approaching 2020 and all of a sudden there they were. I said, oh my goodness. There's I don't know if it's in that or another book that talked about, it was a Moore's law, and that is the doubling of technology. So every 20 months, they just round it off to 2 years, technology doubles, which means you can fit twice the amount of information on half the amount of space. It's just crazy. For a long time, that doesn't mean anything. Just like, I teach finance and I tell people if you take a penny and you double it after 31 days, you have over $10 million. It just seems crazy. For a long time, it doesn't mean anything. You have 1 penny, then 2 cents, then 4 cents, then 8 cents, then 16 cents. And it seems like nothing, but there is a magic point where it just goes crazy. And now doubling has a big effect. And that is where we're at with technology today. And we are going to see things that we've never even thought possible before. And the reality is we're going to have to navigate that environment as we get into it. There's only so much we can plan and prepare for, because we just do not know. In that same book, Abundance, when it talked about the self-driving cars, it said, it talked about fuel alternatives. So let's say you had a infrastructure to recharge your car, but it was an hour away. And of course, your response to that is, I'm not going to spend an hour driving and then an hour back just to go charge my car. And then they challenge that. Well, what if your car is now self-driving? Now you can send it while you're sleeping and then it drives back. Oh, okay. Well, if that's the case, then I can do that. So much of what we are going to navigate through this environment, and it's both exciting and scary at the same time, it's going to have to happen for us to then look at it through a new lens. And we won't have that lens until certain things happen. So we'll continue to navigate it, but so much of that environment, it's going to be, in my opinion, a very much wait and see mode. And it's going to be, like I said, it's going to be very exciting, but it's going to be a little scary too. So I want to make sure that everybody's got their eye on the right areas of progress, because it could be very interesting. But that's kind of my perspective on that. Thank you.
Thank you, Kevin. How about you, Kadiri? Oh, you're mute, Kadiri.
Yes. No. I think like we've seen a lot of technological advance, right? Some people tying up to this SDG number 10, which is a lot of inequality and other stuff that is happening within the technology space. And you can see that right now, if you're not investing in AI, if you're not already invested in AI, you're already behind. Right? And then if you're not already in quantums, you're already behind. So when you see what is happening, like it goes back to what I'm saying. The countries who are already advanced are always going to be the ones, investing in this technology in advanced level. Africa, they don't. Like we don't. They're still trying to find out capital to survive, to move from one level to another. So even with the advance in AI, it can do as much as it can, but it's still also going to create separation. All this advanced technology, for me, it does not bring any inclusion. It brings advanced separation between the big nation and the small nation. So until those big advanced nations can start to see that without a little advancement in other nations, there will be no bigger advance in a global nation. What I mean is that we have 8 billion people in the world. If only 1% of the global global nation are the one controlling the technology, there's always going to be, other 99, let's say 9 billion people still suffering from it. We all see that. So I'm hoping with this SDG 10, this advanced nation can look at emerging market as a space to be able to bridge the gap and also use the emerging market and to diversify their portfolio and diversify their risk. Because when you look at all of those capital market, you can see there were a lot of gain from the emerging market more than the bigger market because of risk diversification. So I hope this is what this technology is going to do, being able to expand diversity in technology world. Thank you.
Thank you so much. Leonora?
From the high tech background, when I quit in 2018 from Intel, we've already designed AI for self-driving cars, and I got to test that. So it was actually super cool. It's not scary. People are saying, aren't you scared? And I said, no, because it can react way better than I can in an instant. And I think it's the same thing for banking and for threats on cybersecurity. The cloud and all the software can go and search and destroy maybe all these cyber threats in all the banks and financial institutions. So you don't have all these things, all these threats that says, I'm sure there was a lot of threats that were stopped before it got any worse, and there were those that gone through and say your data has been compromised, and they sent emails to all their customers. But for every single one of those, I'm sure there's hundreds that got stopped because of technology.
That's so true. And then so for me, just leverage AI for data analysis and then customer insight, then embrace cloud computing like what Leonora is saying for scalability, and also prioritize robust cybersecurity measures. Stay ahead in technological transformation by integrating AI and cloud wisely to gain a competitive edge. While you're learning this AI, just remember that all this AI, we still need your own creative aspect to it, your own soul, your own personality. So don't be afraid of all of these things. Just, practice it, use it for your own good, for whatever you need it for. But no, don't forget that your input, your creativity is a must, and your wisdom is so much smarter than the AI. The AI need us to be built. So understand that. And I just wanted to just go ahead and transfer this over to Crystal to wrap up.
Thank you so much. And I want to thank all of you all. You had some really, really great inputs, great thoughts, and great insight from each and every person. I know that myself, I'll be going back to listen to this in more detail because there was a lot of good interaction. So I want to thank everyone for being a part of the broadcast for today for the Sustainable Goal number 10. And we will play the ending commercial on our way out. Thank you all so much.